Welcome! If you are a pension board's member approaching retirement and would like to learn how to annuitize your pension account, this video is for you. Annuitization is the process of converting your annuity plan investment into a series of lifetime retirement income payments. We will discuss the pension board's annuitization process so you will be prepared to transition into retirement more easily, whether you are an active pension board's member or inactive. Let's begin. First, here is a timeline for the steps you will need to take to start receiving your lifetime monthly retirement income. Before you reach the third month that precedes your retirement date, we recommend contacting a financial planner to discuss your plans. If you are less than 3 months away from your 65th birthday, you may need to apply for Medicare Parts A and B. We recommend that you visit medicare.gov to learn about your options. 3 months before you retire, please contact the pension boards to schedule an appointment with the pension counselor. We will send you the necessary forms to start the process. 2 months from your retirement date, we will ask you to return by mail the completed annuity application and any supporting documentation requested by your pension counselor. The pension counselor will work with you closely to finalize any details. Once your documentation is in order, you can expect your first lifetime retirement income payment to be issued on the 20th day of the month. Subsequent payments will be made on the first business day of the month. Next, we will discuss items that you will need to prepare as an active or inactive member. We will review active members and inactive members separately, and then look at additional documentation that you may need depending on your life situation. For example, if you are married, some forms may require spousal consent. Please note that the forms we review in this presentation may or may not apply to your specific situation. Let's begin with active pension board members. An active member is defined as someone who is currently participating in benefits such as health, dental, life insurance, and actively contributing to the annuity plan. Here's a checklist for some basic documentation requirements based on your specific life situation. A completed annuity application will allow you to select the options for your lifetime retirement income payments and provide the pension boards with your banking information so you can receive your lifetime retirement income payments directly into your bank account. A completed tax withholding certificate allows you to elect your federal tax withholding. State withholding requirements vary by state, so your pension counselor can discuss this with you in more detail. Provide proof of age, which can be any of the following: a copy of your birth certificate, passport, or driver's license. A completed termination of full-time employment form. If you are currently working, both you and your employer are required to sign this form. This form confirms that your employment will be terminated and when your benefits will end. The employee change form. If you choose to continue to work after annuitization, both you and the employer are required to sign this form. This form indicates whether you and/or your employer will make ongoing contributions into the retirement savings account. The insurance coverage election form. If you wish to continue any of the pension board's health or insurance coverage plans, you may use this form to make those elections. A retirement savings account enrollment form, also known as an RSA, is for you to complete if either of the following applies. 1. If you would like to transfer a portion of your annuity account balance to an RSA, then when annuitizing, you are eligible to transfer up to 20% of your employer accumulations and 100% of your accumulations. And/or 2. If you continue to work, either you or your employer contributions will be contributed to the RSA. Now let's discuss inactive members. An inactive member is simply defined as a member who is inactive in benefit participation or who is no longer making contributions to the annuity plan. The list of required documents for an active pension board's members is a lot shorter. In this case, we only need the following forms: a completed annuity application, a completed tax withholding certificate, proof of age, and the retirement savings account enrollment application if you would like to transfer a portion of your annuity account balance to an RSA. If you have had any life-changing events such as marriage, divorce, or the loss of a spouse, The pension boards may request additional documentation in order to complete the process. Some of these documents may include a copy of a marriage certificate, death certificate, or a qualified domestic relations order. If you have had any of these life-changing events, please know that your pension counselor will walk alongside you through this process. Now let's talk about some of the key decisions you will need to make. In this next section, we'll discuss partial withdrawals, your choice of annuity type, and your pension payment options. These decisions should be carefully considered as they cannot be changed once the payments begin. Your account accumulation includes any money that you or your employer contributed and earnings from those contributions. You have the option to take a distribution on a certain percentage of your account accumulation. The remaining accumulation is converted into lifetime retirement income payments. For your account accumulations, you have the option to take a withdrawal of 100% of those accumulations and transfer them into a retirement savings account, into another tax-deferred account, or take a cash distribution. It's important to note that you must distribute either all or none of your accumulations. Please note that if the distribution is taken as cash, 20% is withheld for federal taxes as per IRS regulations. Depending on your state of residence, you may be subject to state taxes as well. The pension board recommends consulting with a tax preparer for how this will impact your personal tax situation. For your employer accumulations, you have the option to take a withdrawal of up to 20% of your employer accumulations. The distribution options for your employer accumulations are the same. Now let's discuss the annuity type selection decision. You must elect one of two annuities, basic or participating. Partial elections are not allowed. The basic annuity is the steadier annuity option where retirement income is expected to remain relatively constant throughout your lifetime because its underlying investments, mostly fixed income securities, allow for more stability and less volatility of your lifetime retirement income. The participating annuity is the more growth-oriented lifetime retirement income option, where investment allocations consist of global stocks, bonds, and other private assets, creating more opportunity for growth of future lifetime retirement income, but it can vary. Both annuities are professionally managed by pension boards' investment staff, external and internal asset managers, and are overseen by the investment and benefit committees of the Board of Trustees. At retirement, your initial benefit will be the same whether you choose the basic annuity or the participating annuity. Both annuities are reviewed annually for adjustments to the annuity benefit. Any benefit change will be effective January 1. For more information on how adjustments are determined for the basic and participating annuities, click on the link below this video called How the Pension Board Determines Lifetime Retirement Income Changes. Finally, let's discuss your pension payment options. This decision impacts the monthly benefit amount and what happens to your benefit after you pass away. For example, do you want to receive payments for just your life? Or do you want to receive payments for your life and the life of your spouse or another beneficiary? It is important to note that a member can only select one option, and that selection is final. Since every member's financial situation is different, there is no right choice for all. A member's life expectancy, their beneficiary's life expectancy, if applicable, their personal and estate goals, as well as their overall financial picture are vital factors that impact the decision. Let's go through each option. The single life annuity option pays a monthly benefit for the rest of your life. However, it provides no continuing benefits to a beneficiary. The single life annuity option with 10-year guarantee is the same as the single life annuity, but it provides a potential payment to beneficiaries. If you die during the first 10 years of payments, the same monthly payment will continue to be paid to your beneficiary for the balance of the 10-year period. If you live beyond the 10-year period, you are paid for the rest of your life and payments cease only at your death. The 66 2/3 joint life and survivor option also pays a monthly income as long as you live. If your joint life annuitant survives you, he or she receives 2/3 of the amount that you are receiving for the rest of their life. If your joint annuitant dies first, it does not affect the amount of your continuing payments. However, you may not name another joint life annuitant, and monthly payments will cease at your death. The 66 2/3 joint life and survivor option with 10-year guarantee is the same as the 66 2/3 joint life option, but it provides a smaller monthly benefit. If both you and your joint life annuitant die during the first 10 years of payments, an alternate beneficiary will continue to receive 2/3 of your payment for the balance of the 10-year period. If you live beyond the 10-year period, payments continue as a full benefit to you while you are living. Then, after your death, the payments will go to your surviving joint life annuitant as a 2/3 benefit payment, ceasing upon their death. The 100% joint life and survivor option pays a lifetime income, smaller than any of the options above, as long as either you or your joint life annuitant lives. The same benefit continues to your joint life annuitant for life if he or she survives you. If your joint life annuitant dies first, it does not affect the amount of your continuing monthly payments. However, you may not name another joint life annuitant, and payments will cease at your death. The 100% joint life and survivor option with 10-year guarantee is the same as the 100% joint life option, but it provides a smaller monthly benefit. If both you and your joint life annuitant die during the first 10 years of payments, an alternate beneficiary will continue to receive 100% of your payment for the balance of the 10-year period. If you live beyond the 10-year period, payments continue as a full benefit to you while you are living. Then after your death, the same payment will go to your surviving joint life annuitant, ceasing upon their death. This chart shows examples of varying monthly payments per annuity type that we just discussed. You can also run various pension payment scenarios by logging into your account at www.pbucc.org and by following the prompts provided on this screen. You can also discuss your scenarios with your pension counselor by calling 1-800-642-6543.